Welcome to the Tough Decisions Network for Entrepreneurs. I'm Dan Hanford, and my wife, Danae, and I interview successful people sharing stories behind tough decisions that they've had to make along their journey as an entrepreneur. On the podcast with us today is Devin Elder. He's the principal of DJE Texas Management Group, and he's a multifamily investor in San Antonio, Texas. And since 2012, he's completed over 100 real estate investment projects and is currently the principal in 660 units of multifamily properties. Welcome to the podcast, Devin.
Thank you so much for having me. I appreciate it.
Hi, Devin, and welcome. We want you to get us started this morning and just tell us a little bit about where your focus is right now in your business and real estate.
Yeah, sure. So at this point, this podcast is kind of mid-2018. My predominant focus is on multifamily, 100-plus unit projects, preferably in San Antonio. A lot of syndicators are nationwide. I'm trying to keep it in my backyard where I grew up. So far, I've been able to do that. And so it's really just working on finding the next deal, making sure our existing deals are performing at or above pro forma for existing investors, and finding the next deal that pencils. Most of them don't. I started out in single family, and you look at 20 deals and you maybe buy one, and it's kind of the same thing in multifamily, except maybe we look at even more deals than that. So looking for that next deal that we can conservatively underwrite, go out and take down. That's where I personally spend most of my time, is finding the next deal.
And are you doing this full-time, or do you have another job that you're doing at the same time?
Yeah, I've been doing this full-time since 2015. I started investing real estate in 2012 and did both real estate and a full-time job for a number of years, and really burned the candle at both ends. And, looking back, there's plenty of things I would have changed, but I think that was really kind of a requisite, was to really do both in order to replace my income first and then step out full-time. So I've been full-time for a little while now.
Well, I want you to talk to us about, first, a tough decision that you have had to make along this journey as an entrepreneur and real estate investor. And I always, merge the two, because as a real estate investor, you are also an entrepreneur. So along this journey as an entrepreneur, what is a tough decision that you've had to face that you made the decision and it really didn't turn out so well? I like to call it the sore thumb tough decision, where, it doesn't matter if somebody asks you, what was the hardest thing in business, you can always have that thing to point to and go, I learned a lot through that particular tough decision. And then as you go through that, I want you to talk to us a little bit about some of the lessons you learned through it as well.
Well, one that stands out for me was early on in my investing career. I mentioned that I started in single family, and I started out buying rentals. I would buy them with hard money or private money and fix them and refinance out, hopefully, all my capital. And that proved to be a very sustainable business model. I didn't start out with a lot of capital in this business. So to be able to refinance out all my money and go rinse and repeat that, I was able to build a rental portfolio. But after doing about 10 or 12 rentals, which I think is a good, relatively safe way to start in single family, I started getting into flipping houses, and I started flipping a few houses. And there was one particularly ambitious project that I took on. The tough decision with regard to this project was just hanging on. And I think I made the wrong decision. And I ended up firing a contractor halfway through it. The thing was not budgeted correctly, was way over budget, way over the timeline. All the things that can kind of happen with a flip project. I consider flips to be a little more speculative and risky. The tough decision I made at the time was, because the contractor said he would have bought it out for me and I would have walked away with no profit, but no loss either. And that's the decision I should have made, but I had too much pride in it. And I said, you know what, you're going to walk away from this project. You're fired, and I'm going to see this thing through the end. And so I held on and I rode that thing all the way down. And it took a lot of capital out of my own pocket that I hadn't budgeted. And it was a lot of sleepless nights. It was a lot of worry. And frankly, just the scope of work was beyond my current capabilities. And it forced me to grow. So, the tough decision there was to finish the project myself, when I should have just cut my losses, checked my ego at the door and said, hey, you take it. You run with this thing, knock yourself out. I'm going to walk away with neither a profit nor a loss, but I'm going to walk away with my time and energy back, which is, as I've discovered over the years, is far more important than a couple of dollars here and there. What is my time and energy worth? So that's what I took away from that tough decision that turned out poorly, because I ended up losing a lot of money on that deal. Fortunately, it was all my money, and I've invested millions of dollars for other people over the years. I've never lost a nickel of investor capital, but in the early days on some of those flip houses, there were some experiences where I did lose some of my own capital. But in the scheme of things, none of it was career ending or anything like that. It was just painful. And those painful experiences, they sure get your attention. So.
Well, and I think that those, situations where, you lose out on a particular deal, like you said, it's a little bit of a higher risk situation when you're trying to flip houses and a little more speculative. And as far as, doing, what you're doing now in the multifamily space where, the biggest, key there is capital preservation, which is what we always try to shoot for. If a deal does start to, go to a different direction than what the plan had provided, you can always exit the plan. You can always sell the property and still pull out your capital. So you're not losing that. But I think the biggest thing here is understanding that from an outside investor looking into this situation saying, hey, Devin, you lost some money here. But to me, I look at that and I go, that's actually a good thing because now you know how not to lose money, because some people who have never actually been in a situation where they've actually lost money in a deal or in a business or something like that, sometimes it's harder to really understand what to look for and making tough decisions as you move forward to make sure that you don't lose money moving forward. Does that make sense?
It sure does. And I really, when I invest with somebody now, I want to know that they've been punched in the gut before because people are going to handle that differently. If you've never been, punched in the gut in the business world, I almost think that you don't have the requisite character needed to kind of deal with some of the ups and downs of being an entrepreneur. So that's kind of the way I look at it. I think some of my failures and losses early in my investing career really were necessary to create the kind of character within me to be, I guess, to put me where I'm at. And, I don't advocate failure or anything like that. I certainly didn't plan for any of those early failures, but, it created a character within me and I guess in a resilience and a kind of a toughness and kind of a, I'm experienced and that experience didn't come easy, but that's what I look for in business partners as well is, have they gone through some tough challenges and persevered and gotten through the other side.
So what do you do now to mitigate some of those risks that you maybe had in the earlier days for these deals that you're putting together now?
Well, I think specifically in the multifamily world, it's a very different animal. I mean, I still have a company, a single family company, and I've got a great team in place there. And the biggest thing we do there to mitigate risk is to buy right. We're just buying really, really discounted properties. And boy, when you do that, it gives you a whole lot of breathing room. And we're also in a nice capital position now where, if we need to sink another $20,000 into a project to add some square footage or have a longer hold time or whatever the case is, that doesn't really matter anymore to us because we're pretty well capitalized at this point. So on the single family side, we buy right and we're very well capitalized. So we can power through there. On the multifamily side, I think it just comes down, of course, buying right is critical, but you almost have, there's this difference when you're buying cash flowing real estate versus not, new construction, flipping a house, that is not producing cash flow. Nobody's getting paid until there's 100 checks written and the one that's written to you is the very last one. When you're talking about new development or flipping houses. In rental real estate, whether that's single family homes, whether that's apartment complexes, there's a cash stream. Our last project that we bought is producing, close to $100,000 a month in revenue. And when you've got $100,000 a month in revenue coming in, the plane's already in the air. It's already producing revenue. You're just looking for ways to optimize that through better operations or lowering costs or a million different things we can do as multifamily operators. And I just find that business model a lot more forgiving. Now, of course, you've got to underwrite the thing correctly. You've got to assume cap rates are going to expand at exit. You've got to assume that rent growth is not going to be some crazy number. You've got to overcapitalize and over budget for your capital expenditures. So you do all these things that, I've been through so many, just dozens and dozens and dozens of projects over the years. I always feel better raising a little bit more capital on these things, whether it's multifamily or single family. And, if you end up returning it to investors at the end, that's great. But overcapitalize the rehab budget, assume things are going to take longer than they are, assume that your rental increases aren't going to go crazy, assume a little bit more vacancy than maybe you think is what it's actually going to be. And just trying to bake in at every turn, bake in some conservative underwriting. Now, if you do that too far, you're never going to make a deal pencil. So you've got to balance it with reality, and you've got to eventually close a deal at some point. But, I think it's okay to go on 100 tours and underwrite 100 properties and not getting any of them. As long as, the one that you do end up putting under contract, you feel good about executing on that pro forma.
So I want to shift gears here a little bit and talk about a tough decision that you've had along in your journey that had a really good outcome or an outcome that was much better than you had expected, and some of the lessons you learned through that one.
Yeah, this is pretty clearly for me was the decision to quit my W-2 job. in retrospect, it was the best decision I've made in my entire life that doesn't involve my family, right? Getting married or children in terms of my professional life. But it was positively terrifying. And looking back, it's easy to say that, the businesses are doing well now and things are really going along at a great clip. It's easy to dismiss that. But at the time, and this was in 2015, it was just positively terrifying. I mean, I had children. I had a nice 6-figure job that was actually, in terms of a W-2 job, could not get any better. I had a ton of leeway. I didn't have any, negative experiences at work. I had a great boss. I had great income. But at my heart, I'm an entrepreneur, and it just wasn't a good fit, even with the good income, even with some of the flexibility and everything you could want in a W-2 job. So it was very difficult to walk away from that. And not to mention just financially very scary with family and kids and being the sole provider for my family. However, that was the single best decision I've made in my life outside of, my family. So that was one that turned out very good. And the thing that there's 2 things that were occurring to me while I was working my W-2. One was asking this question kind of repeatedly: how can I 2 or 3x my income? And I've got a nice 6-figure job here, and I'm going, how do I 2x or 3x my income? And I'm looking around going, well, maybe I could get my boss's job. Maybe that's going to 3 or 4x my income. And I'm looking at the path to get there, and it's just, aside from being difficult, it's going to take too long. So it was asking that question about how I could, 2, 3, 4x my income. And that really led me to believe that it's not going to happen in a W-2 job. The other thing was, if I had all my time and energy and focus, because I'm already making money and doing well in real estate with single family rentals and flips, if I could focus all of this time, my commute, all my time in the office, all my time I'm spending thinking about the office stuff, if I could shift all that energy into this entrepreneurial pursuit, how much could we magnify this thing? So those 2 questions really drove me to eventually walk away from that W-2 job. And it turned out just like I wanted. I was able to massively increase the income, but also put all that energy and attention into my own pursuit, which at the end of the day, money and dollars aside, is the real driving force for me, is having my own venture to run. There's nothing like it.
So when you made that decision to step out, did you just all of a sudden make the decision and like the next day you went in and you just quit? Or did you make the decision and then have like a plan over the next 6 to 9 months to a year or whatever to kind of build up and save up and then be able to exit? Or what was your strategy there for, making that transition?
Well, looking back, it felt like I was leaping out of an airplane without a parachute at the time. Looking back, I think I had a pretty timid approach. And that was that I wanted to entirely replace my income off of rental real estate, which I did. I just replaced it. I didn't replace it and then a whole bunch. So I replaced my income, my monthly income with rental income over the course of about 3 years of working really hard, buying rentals and so forth. And just really spending literally every spare minute that I had working on real estate for about 3 years. So I replaced my income, and then I kind of put some cash reserves in place, and then I created kind of a system to flip some houses where there was larger chunks of capital coming in that could, a couple of those deals could replace my income right there. So it was more of a timid approach. And then I even, during my job, I even said, well, I'm thinking to myself, what if I didn't just quit? What if I just became a contractor for this company where I didn't have to come in the office, where I could still do my job, but maybe cut down my hours? So I pitched that to my boss, and God bless him, great guy. He, sold it to his boss, and he came back 2 weeks later and said, you know what, Devin, we got your proposal approved. You can become a contractor and work from home, and we can do that. And actually, after those 2 weeks I had to think about it, I realized that I just really wanted nothing to do with that company. I wanted to be 100% pursuing my own endeavors. So I felt bad going back to him and saying thank you for getting that approved. But now that I've actually asked you for it and had a few weeks to sit on it, I'm actually, my heart and my head is 100% out of here. So that was kind of my taking some steps towards that process, which in retrospect looks timid. At the time was positively terrifying.
So Devin, talk to us and our listeners a little bit about the strategies that you use when you are facing a difficult decision.
Yeah, so I've got a handful that I go to. The first one is to write about it. And I'm sometimes reluctant to write because it just seems silly, but it is without fail, within 5 or 10 minutes of starting to just write my thoughts about whatever's on my mind, a tremendous amount of clarity comes. So even though I still feel silly, open up a Word document and just start writing. really within 5 to 10 minutes, I'm getting a ton of clarity on it. So I always write. In fact, that's my ritual. As I get up, I drink coffee and I write every morning. It brings me a tremendous amount of clarity. And sometimes it's a lot of negativity coming out. Other times it's things I'm excited about. So writing is my first one. I bounce everything off my wife. While she's not, necessarily the real estate expert that maybe I've become, just getting it out of your head and talking to another person. My older brother's also been an entrepreneur for decades, and I value his input. Even though he's got no real estate experience, he's a tremendous entrepreneur. Another strategy I have is so basic, but just to sleep on it. If I can put off making the decision one day, if it's not an urgent decision I need to make now, I get as far as I can with it in one day, write about it, talk to people about it, and then shelve it. And I always feel better the next day, kind of having a fresh perspective. And then the last thing I do is just this test to imagine when I'm 80 years old, if I'm fortunate enough to get to be that old, I'm 40, so that's the halfway point. When I'm 80 years old and looking back at this decision point in my life, what will I tell myself? And almost inevitably, I know the decision I need to make. And usually my 80-year-old self says, quit being such a wimp about this and do what you need to do. And so that's a helpful test for me, because a lot of these decisions, it's just not going to matter in a few years or even a few weeks a lot of the times.
That's an interesting perspective, because we do make sometimes a mountain out of a molehill, to use a common phrase,
Sure.
and we make a really big deal. And, like you said, when 30, 40 years, sometimes 3 or 4 days, like it's not going to matter. So just got to do it and move on.
Yeah, that's right.
We're going to take a short break now to hear from one of our sponsors. And when we come back, we're going to talk to Devin about his favorites as it relates to business and his real estate investment.
Hello, this is J.V. Crum III, host of the Conscious Millionaire podcast, with a special announcement for business owners, entrepreneurs, and coaches. Do you want to create a big impact with your customers and turn it into big money? Then I created the High Performer Formula especially for you, because it contains the exact steps you need to become a high performer. Now, these are the steps I've used to make over $30 million, and I'm pulling back the curtain to share the steps with you so that you can reach levels of financial and business success you may have only dreamed of before. Get your hands on the High Performer Formula today. It's my gift to you, so go ahead and download your own copy now. Just go to consciousmillionaire.com/high performer. Again, go to consciousmillionaire.com/high performer.
All right, we are back with Devin Elder, and we're going to be going through the trifecta, which is a series of questions and answers from him around some of the favorites that he likes in business. So first off, Devin, I want you to talk to us about your most favorite technology that you use in business every day that helps make your life easier as an entrepreneur.
There's so many great tools. I mean, the iPhone's tremendous. The property management software that we use on our multifamily projects is tremendous. But if I have to pick one, it's going to be Google Docs. I've got probably 100 gigs in my Google Docs that is, obviously Google backs it up, but then I hire 2 other third-party services to back that up, because it's that important to me. And it's the storehouse of everything related to my business, whether it's spreadsheets, files, marketing stuff. I mean, it's all in there. So my whole life's on Google Docs. It's accessible on the phone. It's easily shareable. So couldn't live without it.
Devin, what's a quote that you've heard that's helped you as an entrepreneur?
There's so many, and I used to write these down in a notepad. There's just been so many over the years, but one that stuck with me just this last week I wanted to share was, a penny saved is a penny. And we've all heard that maxim that a penny saved is a penny earned. And of course that's true, but we're out here trying to buy $5 and $10 million projects. And so this scarcity mindset of watching the pennies sometimes doesn't serve us on these larger pursuits. Of course, we want to control costs and everything like that. But as I've gotten into the bigger projects and there have been more zeros on things, I sometimes have to remind myself that I'm not that 16-year-old busboy trying to scrounge up and save for a car anymore. We're adults and we're on to bigger things now. So a penny saved is a penny. Helps me keep things in perspective. That we're working on bigger projects now.
I really wish you hadn't said that, because I have a feeling I'm going to hear that one thrown my way a few times.
No problem. I'll use it.
There you go.
I'm going to hear that one. What's a favorite book of yours that's helped you either in the way you make decisions or as an entrepreneur?
Yeah, there's just so many, right? I mean, there's so many great books, and I still consume a lot of books and podcasts today, probably more podcasts than books these days. But I'll say the 4-Hour Work Week, and this goes back to 2008 when I read that book, and it really lit a fire in me to find a way to separate my time from my income. And it was many years before I was sitting down with my wife the other night, and I said, boy, I started on this dream 10 years ago when I read 4-Hour Work Week, and I had no idea at the time that it was going to be real estate, and I tried some other things before that, but I've been working on this dream of financial freedom for 10 years now, and really I don't want to say it's just now happening, but we're really kind of kicking it a high gear 10 years later, and I attribute it a lot back to that book. Now, are some of the things in that book silly and unrealistic? Absolutely. But it served a purpose for me, and then it lit a fire for me that is, still burning now. And so I kind of credit that book for a lot of those things. And the biggest piece there, the biggest takeaway is, you've got to leverage other people's time and talent, which is a very simple message, but one that I've worked really hard on over the years to find the right team and surround myself with the right people so that I'm doing a very small, very valuable set of activities. And I think I've been working on developing that for the last 10 years, and it's served me very well.
So what's the next thing for you right now, Devin, on your vision or dream board?
Professionally, it's finding the next 100+ unit multifamily project. So, I've got 3 tours this week to look at properties. I have an LOI out on another property, really just constantly underwriting deals, constantly touring deals, and constantly rejecting deals, basically rejecting the overwhelming majority of them, but combing through the sand to find that next project. So my goal is, I closed a project in March, and we're just sending out our first quarterly distributions this week on that. My goal is to close one more 100+ unit value add project this year. So that's the next big one for me. And it's nice that that's really kind of my but primary focus at the time being.
So how can the listeners reach out to you to start to follow you more or get in contact with you after listening to this episode?
The best platform would be my website, DJETexas.com. That's Delta Echo Juliet Texas spelled out.com. I've got a lot of video content there. You can sign up for our monthly newsletter which give you a really in-depth look at all of our projects and what's going on. And then, of course, you can reach out and, schedule some time to chat with me. And it's all there on the website.
That's DJETexas.com. We'll make sure we put those in the show notes, which can be found at toughdecisions.net. Thank you so much, Devin, for being with us today. Look forward to having you on a future podcast as you continue to grow as an entrepreneur.
Thank you so much for your time. Really enjoyed it.
All right. Have a nice day.
You too.
Thank you for listening to the Tough Decisions Network. Be sure to visit toughdecisions.net to gain access to show notes for this episode and to join our free weekly entrepreneur email where we will send you news about the latest technology for your business, inspiring quotes, and the latest books for entrepreneurs. That's toughdecisions.net.